Is the much anticipated end of the bond bull market finally here? I mean, if it is, it seems like it's happening not with a bang, but with a whimper, sort of petering out here.
Sure. So I think the death of the bond market has been talked about for a long time, and I think is an exaggerated statement. I think for the bond market to have the debacle that everyone seems to be foretelling, you have to have inflation rise meaningfully higher than what it has so far done. In addition, global savings have to come down. The structural issues that have kept rates low from a global standpoint have to go away. And I don't think any of that is going to happen. The other day, we heard that the Chinese were not going to buy treasuries anymore. And I kind of have a great deal of difficulty with that. That is, if a deficit is going to widen and they are going to be exporting stuff to the U.S., somebody would have to buy the dollar, whether it's the Chinese or they force it upon somebody else. We will find out later. But at the end of the day, we think rates are well anchored. Doesn't mean, given global growth environment, things can go up a little bit. They could. But the end of the bond market, I think, is an exaggeration.
Still, with the Fed rate hikes, you are seeing the 2-year yield now at the highest level since 2008. The chart 6039 also showing you that when compared to dividend yields on the S&P 500, they might be now at the same level. So at least does this take the case away from further stock market rallies, especially given that we've seen them soar so much?
Of course. I think the Fed is tightening, and given the pace of global growth and U.S. growth, especially given the tax-driven tailwind, I think the Fed is probably going to do somewhere between 2 and 3 rate tightening today. So clearly the curve will continue to flatten, in our view, and the policy rates are going up. Whether that leads to the end of the bond market, whether that leads to 10 years and 30-year rates getting unanchored, I think that is really the question. We expect the Fed to tighten and to some extent front end of the market become more attractive. But I think for the equity market, the fact that you have enough growth, enough profitability growth, and enough tax-driven benefit to earnings, I think equities continue to do well nevertheless.